Hello, Michael Bull here with the Commercial Real Estate Show, or the 2015 Recon event, the ICSC Retail Event of the Year. We're here with Kevin Imboden with RC Analytics. We're going to talk a little bit about investment properties. You know, M&A has been a big thing in commercial real estate in general. What are you guys seeing out there?
Well, had Simon completed their massive takeover during the quarter, we would have seen the best retail quarter of all time in the U.S. Unfortunately, it didn't happen. Now, that's not to say that that won't happen in the future. So Blackstone has a deal underway, taking over Excel Realty, $2 billion, not the biggest in the world, but it leads me to believe that there's a lot more coming. There's been some M&A in the other real estate sectors, and we're getting the idea this might be happening because retail pricing is looking a little affordable.
And it's affordable compared to the other sectors, is that what you're saying?
That's correct. If you're looking at the pricing increase year on year, especially over the past couple years, for CBD office, apartments, ton of capital flowing into those sectors. But retail and industrial, huge gap there in the increase. So I think there's a lot of increase left.
And are there better cap rates as well in retail than some of these other sectors?
I think the retail caps are starting to see a bit of compression, but it isn't huge. The average retail cap currently, 6.4 nationwide, as of pretty current. A lot of that is due to the inner city properties and the large malls that have sold. Those have sold for really low caps, below 6, some are going below 5 even. Strips, around low 7s.
And what's the trend there? Do you think are they trending down? Are they still compressing a little bit, or is that starting to level off some?
Major compression still going on in the inner city and the malls that have sold, the high-end malls. Strips, very gentle.
So what's your prediction moving forward?
Prediction moving forward is there's a lot of action coming. There's a lot of interesting stuff going on, not only the M&A sector, but a lot of assets that are coming to the market. And financing is dirt cheap right now. And until the Fed raises rates and things might change, there's going to be a lot of action.
And there's a lot of capital coming into the market, isn't there, into the U.S.?
Absolutely. There's a lot of international investment. One large transaction that everyone certainly knows about, Australian Super buying a quarter interest in Ala Moana Center in Hawaii from GGP, and then the U.S. pension fund doubling after that and getting the 12.5% interest to CREF. So with that Australian investment, there's a lot more to come. There's a lot of Korean and Chinese investment also entering the country, as well as some from Europe.
And what's drawing people to retail investment properties, Kevin? I mean, we're here at ICSC, and I know it's very vibrant compared to some of the years past that you guys are talking to these investors every day. What's bringing them to retail?
It's bringing them to retail is, again, there's a certain affordability to it. There are a lot of decent assets that are being built. There are a lot of decent assets that are available. And so that looks to continue.
And you're thinking cap rates could compress a little bit more than on some of these higher end properties?
It seems like there could be that case. That's been the trend over the past couple of years, so it very well could continue.
Now, investors, when they're looking at these cap rates today and they're looking at retail, some of the reason they're able to pay these low cap rates is because of the other alternatives are just not there? Are they expecting that rents are going to go up, and so they're going to have improvements in their NOI growth? Or, you know, what do you think is leading to these low cap rates? And then what are they doing for exit? Are they considering interest rate increases on their exit cap rate?
I think there are different strategies depending on the investor. If you're looking at the inner city properties, they're relying on the fact that those leases are going to be for more and more money because people are moving back into the inner city. We've seen that as an overall trend. So that's going to be a big growth point. I think as far as exit strategy, it varies fund by fund. Some people are looking for that manner of growth. Some people are looking for redevelopment opportunities, especially inner city. And then there's also malls that are being converted into lifestyle centers. So there's a bunch of different solutions.
Okay. And you guys are looking at these numbers every day. Do you see any opportunities anywhere for investors? And is it in redevelopment or where are the opportunities?
I think there's opportunities definitely in redevelopment. Mixed use is getting a lot of looks from a lot of people. Having the retail and residential components together, certainly. And then also some kind of, again, I'm sounding repetitive, but the inner city options with large office space with a lot of retail at the bottom. those are all options.
Well, Kevin, thanks for joining us today.
Thank you so much, Michael. Take care.
Michael Bull here at ICSC Recon 15. This is the Commercial Real Estate Show.
The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.